Welcome back for another top-notch video. This week, guys, we'll be talking about the week of 19th of August to the 23rd of August. A lot to cover this week. One thing we want to mention right off the bat is this TSP channel, top-notch channel, is now beating markets, all TSP funds, all ETFs for the year. So keep that in mind. If you would have made the same moves I would have made for this year, you'd now be beating funds at this point. So we're just going to talk about a lot of how we did that throughout the year, and then review some very critical charts of the TSP and Roth IRA funds. With charts, guys, of course, our purpose of our channel is not to always beat markets on this channel, it's to safeguard capital. And as you'll see this week, we did see some warning signs. Please stay tuned throughout the video. As always, our channel, the Top Notch channel, talks about the TSP, which includes the C, S, I, and F funds. These funds are the same as the ETFs, IVV, VXF, EFA, and AGG. It's how we track market funds for the TSP. If you're a Roth IRA investor, we also look at these funds so that if you have retirement funds in IVV, VXF, EFA, or AGG, we also review these funds. So this channel is relevant for you as well. The C fund or IVV ETF follow the S&P 500 broad index. The S fund or VXF follows small caps. The I fund or EFA follows international markets, and the F fund / AGG follows bonds. Lot to cover in here. We kind of go over some general overviews of some items, and then we go more into a technical analysis of our charts, and finally we review where our allocation is for this week. Really appreciate you guys tuning in. A lot of stuff going on this week with trade stuff and yield curve and the Fed policy. It's important that you guys tune in and know what your allocation is, know where your money's at, and what you want it to do for you. So let's go right into it. The first thing we're going to talk about is the CCM Market Model. This guy has his own YouTube channel. You're more than welcome to check it out. We like to look at his charts. Give him full credit for that. Please check out his channel. But we're going to go over some really important charts that he displayed for this week. Some of these include bonds versus stocks. When we say bonds versus stocks, we're looking at AGG or the F fund versus like the S&P 500. Guys, this chart goes back all the way to 2010. As you can see in this chart, a lot of resistance on these trend lines going down. What once acted resistance, what once acted resistance now may act as support as bonds breaks through the line versus stocks. So this is bonds not doing well versus stocks. So when bonds are going down, the stocks are going up. Now that we're seeing bonds break this trend line here, we could see bonds start to outperform stocks. The first time we saw this look in almost a very long time, I would say almost 8 or 9 years, we've seen a breakout here. Now, we yet to be determined if this will hold or not, but it's just significant. It speaks to probabilities of bonds outperforming stocks in the future to come. Here's another chart, bonds versus stocks monthly. I want to display this chart. Basically, this shows what bonds did in 2002 and 2008. As we know, 2008 was a really rough period for stocks. When we had bonds break out above their trend line for the first time, we saw stocks in 2008 start to decline. So just keep that in mind, that in history we could see something like that again. It's not a guarantee that it'll happen, but it just speaks to probability, guys, and we want to be sure that we are safeguarding capital and taking the appropriate measures if something like this were to happen. This is IVV, or they say SPY, it's the same thing, versus TLT, which is AGG. Okay, it's the same thing, a little bit different ETFs. This is on a daily scale. We see also some concerning things on a very short-term basis. As you can see with with the IVV versus TLT, IVV is in a downward sloping trend line here. On Friday's close, we were above that, or on Thursday's close, we were above that trend line, and then on Friday, we moved back below that trend line on a downward sloping moving average. Okay, that is not good, guys. That is something concerning. We are also below our middle center line on our RSI for IVV versus TLT. This just speaks to the probability that in the short-term basis, bonds or AGG could outperform, the F fund could outperform IVV moving forward. Really keep that in mind, and keep that in mind when you are doing your allocations for your funds in your different accounts. Again, bonds or stocks versus bonds on a weekly scale. Okay, this is on Friday's close. Again, using the CCM Market Model charts. As you can see, with charts since 2016 on a weekly scale, so I'm looking at a daily, monthly, weekly, basically short-term, mid-term, and long-term basis. These charts, back in 2016, we had a trend line drawn, and it was holding for stocks to outperform bonds. Here, here, support, 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 support. We broke through a lot of trend lines on Friday, guys. We saw 2 trend lines busted here, and then a 3rd trend lines busted here. And I don't have anything else down here to say that that could go lower. Now we could bounce off of that. That's a possibility. But what we've seen in the past, when we don't have any support for some of these things, we could see stocks start to decline. So stocks versus bonds on even a weekly or mid-cycle basis could start to decline based off of some of our charts. Looking at that AGG versus IVV, or the F fund versus the C fund. Another really interesting chart here. So we don't have a NASDAQ fund, that's like a technology fund, but the S&P 500, guys, since 2008 or 2018 has basically moved sideways for a very long period of time. We had that big breakout in the beginning of 2018, and then we have just been sliding back and forth here. Really important to note that this is a failed breakout. This is a failed breakout. We are in a very critical spot here in regards to, and basically, our TSP funds and our ETFs. What's different here versus here? Well, if we look at something like the technology fund and how it moved off its 50-day moving average, we're looking for small differences. What's different here than back here? If we look at this chart moving all the way back to 2016, when we got close to this line here, we bounced off sharply, bounced off sharply, bounced off sharply. Had something different happen here for the first time. We went below the line, had some consolidation, had a bounce off sharply. Okay, this is kind of concerning. This not so much. This is kind of concerning as we touched down on this line again, and we did not bounce off sharply in a very critical spot. This is a more riskier look versus back here when we were bouncing off this line sharply. Keep that in mind going forward. Looking at some of our other defensive assets, gold versus IVV or the C fund. We do not have a gold fund. We only have AGG for defensive assets, but this just speaks to what other people are doing in the markets. Okay, so the last time we had something significant happen with gold here on Friday, we had gold cross the monthly moving line of gold versus the S&P 500. Okay, so that the last time that happened for us was back in 2001. If you guys remember 2001, gold significantly outperformed stocks for a number of years, 2001 to about 2010 or 11, before it dropped right back below that. Very significant here, very significant here. We have to be open, we have to keep an open mind that this could drop back below the stock line as it did back in 1988. If you would have changed your stock allocation to all defensive assets in 1988/1990, you would have been extremely wrong, and the market would have increased significantly. You would have missed out on that. It's important that we take a look at it on a day-to-day basis or a week-to-week basis and monitor it. This is significant. We haven't had this happen in a number of years. So we just want to pay attention to what potentially could happen. But yes, last time we had a cross like that was back in 2001. Want to keep an open mind to what we're doing with our stock funds / TSP funds. This is the S&P daily close with some moving averages and with some lines drawn in here. Obviously, we are seeing some good things. We had this concerning look back towards the beginning of the year, and then towards late last year, and then we moved significantly above all our moving averages into these basically trend lines here. We hit some resistance in here. Not so concerning when we move back to the trend line or the trend lines here. or I'm sorry, the moving averages, not so bad because we bounced off that pretty significantly. Made it above all our lines of resistance here. Really good things. New highs. Really good for the C fund or the IVV. And now we are moving back into these trend lines here. A lot of consolidation. We did violate this trend line here. Since 2019, this has been a trend line that's moved on for a while. Since 2019, we've had this trend line that's been moved on for a while. We do have this one, small one here that we haven't violated yet. But as of Friday's close, this is Thursday's close, we are seeing a very much more concerning look. That price has moved down below the trend lines, and we don't have any support of these lines anymore. So we could see this move potentially back down to 28.25 or 2800. So keep that in mind moving forward. We want to have with the gains that we have this year, we want to protect our capital. We want to protect our gains that we've gained. Looking at a Fed policy effectiveness, we are not seeing the Fed be as effective with their rate cuts. As you guys remember, towards the end of July, we had a rate cut. Price did not act that positively to that. We had a drop in price. So what is price more concerned with right now? Probably some of the headlines. Definitely the president's tweets with China right now are really having an effect on some of the market. Basically, off of our close on Friday, we saw a drop below this trend line again. That is concerning. Keep that in mind. We want to protect capital. Again, we don't want to lose the money that we've worked so hard to gain this year. As far as top notch goes, like I mentioned, we're outperforming all TSP funds this month. Well, not for this month. For this year, we're outperforming all funds. And the reason we have this channel, guys, is because it's important that we monitor each week and we look at each week and we make moves. Very volatile week with all our funds. We want to make sure that we are gaining capital out of our TSP account and not losing capital. We made 3 moves this month. That's pretty significant. Usually we don't make a whole lot of moves. We had to exercise all 3 moves with the TSP. Yes, you can make 3 moves with the TSP. Most people say 2. You can make 2 stock moves and then 1 move back to the G fund at the end, or you can constantly move capital back to the G fund. But we moved from basically moving from stocks to bonds to the G fund all throughout these moves, and I'll show you kind of significantly what happened with our capital. We moved to stocks on the 16th for the first time. We moved from bonds here to stocks on the 16th. Stock funds have been underperforming bonds for this month, and yet when we moved to the stock funds on the 16th through the 22nd, we ended up gaining profit from our stock funds on the TSP channel. We ended up doing very well for this month for stock funds. Now the month isn't over yet, but we did very well for this month, gaining over 1% in our stock funds. That's basically kind of an overview of our move and some general charts showing bonds outperforming stocks in the near future. Speaks to probability. Now we're going to go into kind of what we saw for the week. So like we said, we have been outperforming pretty much for the month. We are underperforming a little bit on bonds, and this is significant again, guys. Like I showed you in some of those other charts, bonds are outperforming all of our stocks funds for the entire month. That's significant. They also outperform stocks for the entire week. And then if you look at stocks versus bonds for the year, guys, you'll see that bonds are now outperforming even the I fund, so one of our stock funds. That's significant. Look at that. Make sure you're paying attention to some things like that. I'm going to show you what we're at for the year. So top notch, this is basically our channel's tracking system. So through the month, or through the close on Friday the 23rd, as of this month, we've gained 1.73% for the month. This is simple interest, so please keep that in mind. I haven't changed it yet. Basically, we have gained 17.5% for the entire year. 17.5%. The highest TSP fund we have for the year has gained 15%. We are outperforming all markets. And it's not easy to do that, and that's not always our goal on this channel. Our goal is to just try to safeguard capital and not lose capital significantly, but we do like when we're outperforming markets, and we are outperforming all markets for the year, all TSP funds for the year, which is really good. It's not easy to beat TSP funds. That is very significant. If you're more of a visual person, this was the week. If you're more of a visual person, this is the week, the 19th through the 23rd. So obviously we entered around the 16th on the stock funds and we exited it around the 22nd. So we ended up making about that 1% gain, and we got out of the markets before we had this plunge here towards the end of the week when we had the tariff increase and just the rate cut mediocre meeting about if we're going to increase rates or not. For the month, as you can see, stock funds have been significantly outperforming the bond fund or the F fund. So CS and I fund have been outperforming or underperforming the F fund for the month. Okay, the month isn't over just yet, but we were able to make a little bit of gain in here. As we said, we entered markets on stock. We were in the F fund since the 6th. Okay, so we took a little bit of a plunge here, and then we gained a little bit in the F fund, and then we also gained a little bit in stock funds and moved out of those funds before we took this plunge here on Friday. Obviously, for the month, like I mentioned, we're up 1.7%, or I believe, yes, 1.7%. And all of our stock funds are down significantly for the month. The only fund we're not beating is that F fund, but we're doing very well. Much rather have a positive month than a negative month, and I'm very happy where we sit for the month of. That being said, we're going to take out one more look at funds from a short-term, mid-term, and long-term basis. This is Grow My Thrift Savings Plan. So we just want to pull this up real quick and kind of go over some of his charts. So on a short-term basis, he shows or displays that there's a lot of resistance at the 50-day moving average. Indeed, that is true. Have a little bit of basically been hitting this level for the entire month of August. Yet to be seen if we'll bounce off that level, but this is the third time we've been down at this level. Possibly could see some support down here, but we'll have to wait and see. MACD and RSI are rolling over, so that is not positive, and we are under a mid. Usually like to stay above this. For RSI, we like to stay above the mid, the 50 level, and as you can see, we've hit that quite a few times now and are headed lower. So and I possibly could see move back down here before we see stock funds move up. Yet to be determined. Speaks the probability on a short-term basis. On a mid-term basis, we're seeing a lot of indecisiveness. We could possibly see some support here. We have not hit that yet. So we could see charts just move a little bit lower before we see them hit that, waiting to see what happens next week. Indices are rolling over though. The MACD is currently, we have our black line below our red line here, which is below our moving average or our PPO line, and then our RSI just moved below the 50 line here, so that's not a positive sign. On a long-term basis, we have a lot of room to fall here for support, but we'll have to wait and see where we're at. But the indices are also continuing to roll over for MACD and RSI on a long-term basis. So we want to safeguard our, like I said with some of these other charts, we really want to safeguard our capital when looking at charts. Now we're going to kind of go over our more technical analysis. So with that, we're going to talk about IYY. We look at IYY because it's a general market fund of all funds, all market participants, professionals, non-professionals, big companies, small companies, everything. So with IYY, what have we been seeing? We've been seeing a lot of consolidation. We're moving back towards that 200-day moving average. We did break this trend line here. That's significant. That's a warning sign. We didn't break it necessarily here, but we did definitely close on Friday below it with more tariff tweets after the bell. So please keep that in mind. This line and this line here are at a very critical spot. We want to make sure that we don't violate these lines and kind of our market technical analysis kind of shows us basically what we could possibly see in the future based off probability. As you can see for our moving averages and our PPO line, the blue line is way below the red line on a weekly basis. That's not good when we're coming up to a critical spot on our charts here, guys. On a midterm basis or a 2-day basis, our PPO line is also below this line. We are having some energy coming out here. Could possibly see a fake out. We want to see this blue line move above the red line before we start to put our capital back in harm's way. And then on a 4-hour basis, we are also just crossed the PPO line, just crossed our moving average line, and we just our oscillator just didn't turn negative. Okay, usually this lasts anywhere from 1 to 4 days. We'll have to wait and see how long it lasts. This one only lasted 2 days. The last one we had after that lasted almost a week and a half. So we'll have to wait and see where that is, but we want to be careful that we safeguard capital in regards to IYY into our market funds. And you'll see a very similar thing with our market funds, so we're going to move into those. So with our market funds, IVV or the S&P 500, the C fund, we also had a major violation of our trend line here. And we tested this this critical line here. It doesn't go all the way back to October, but there were some very critical times here with this line here. As you can see, this line's been pretty significant throughout. So we tested that line. We'll have to wait and see what happens on Monday, but we could lose potential all the way to the 200-day moving average. Also with our indices here for IVV, seeing a negative outlook on a weekly chart. We are in our second week of our DO oscillator is down. All right, our PPO line is below the red line here. Seeing it slope down, that is not positive. Price is not reacting well to that. On a 2-day or mid-cycle basis, we're seeing a lot of consolidation here price-wise. We're in our Bollinger Band, big top and bottom, so people very indecisive on what to do moving forward. Could see a rollover here on our charts. And then finally on a 4-hour basis, we did just see that decrease. We got out of charts. We made our move on the 16th, so I'm sorry, we made our move on the 22nd, so we were right around this area here. We saw some spinning tops up here. We decided to safeguard some capital, and that ended up being a good move. We basically moved from the CNS funds to the G fund. I'll show you that a little bit later on. But we are now negative on our oscillator, even on a short-term basis for IVV or the C fund. Moving forward, we're going to look at VXF. VXF, this is even a more concerning look, guys. So we had a lot of consolidation below our 2 moving averages here. We had a trend line since 2019 right around our 200-day moving average. We fell below our 200-day moving average here. We bounced off it once, bounced off it twice. Can we bounce off it a third time? It only can knock so many times before we end up falling. I don't have any other support down here, so I don't know how low that could fall. We want to safeguard that capital, guys. This is at a very critical level, and if you look at our charts here for VXF, on VXF with a weekly scale, weekly basis, we are in the negative here. This points to probability of not holding on our trend lines, okay, on a weekly scale. PPO line below our red line, our moving average. Oscillators, negative, not good. On a 2-day scale, our blue line is below our red line. That's not good. Our oscillator's moving out, but a lot of consolidation here with price, spinning top, indecisiveness. People don't know what to do. When people don't know what to do, we want to be very careful what we do with our capital. On a 4-hour scale, we just crossed, PPO line just crossed on Friday. Our blue line is now below our red line. That typically can last for a couple days. When we're at a critical point on our charts, that's not where we want our short-term basis to be. We do not want this to move lower with our capital in harm's way, with our capital in the CNS fund or IVV or VXF. We want to stay away from those funds when we have this kind of look and protect capital. That is basically IVV and VXF, so the CNS funds. Let's move into EFA. Let's see what EFA, international markets. International markets have been hurting for a long time, guys. This chart is consolidated below the 200-day moving average. We've been down below the 200-day moving averages for the entire month of August. The 50-day is starting to turn negative here, way below our trend lines up here. We could possibly find support around mid-60s, but also with EFA, we're seeing on a long-term basis, we've been negative for EFA for a very long term. This could point to what the future stock funds are going to happen for CNS. We don't know if that will or not, but this is where EFA is right now, currently today. On a 2-day scale, not seeing any positive things there other than our oscillators moving out a little bit, indecisiveness with this price top. PPO line is below our moving average, and then on a 4-hour basis, we are moving down lower as well. So not a good place to have funds right now. EFA or the international markets, the iFund, not a good place to have funds. VXF, IVV, CNS funds, not a really good place to have funds right now. So let's look at something more positive. So if we look at something more positive like AGG, I'll pull that up for you right now. we look at AGG, we're seeing that AGG did drop below its trend line here this last week. That was concerning to us because we don't want to see it drop all the way back down to this lower trend band. Okay, that would be very good for stocks, but we did see it pop above this trend line again. We've had that for a little while now. That's just pointing to the probability that stocks will not do as well as bonds, like I showed with all our other charts. We showed many charts showing that. AGG on a weekly scale is doing much better than our stock funds. This is positive. PPO line above the red line. Oscillator in the positive, moving good on a weekly basis, on a long-term basis, on a mid-term basis. We are moving down here a little bit. We have positive price movement. We are in the Bollinger Bands. Little indecisiveness on the top here, but our PPO line is above our red line. That's positive. On a 4-hour scale, we're seeing that 4-hour move out of that negative oscillator here. So that's positive. That's good. PPO line is still below that. Something just to watch. We did not invest in AGG just yet because we are more concerned. We want to stay on our sidelines and just see what's all going to pan out in this next 2 weeks or so. I think we'll have a much clearer idea in about a week or two of what is going to happen, especially with some of these big tariffs supposed to be taking place on goods coming up between the Chinese and the Americans. So we'll have to see what happens with that. But that is all of our stock funds for the week, guys. Like I mentioned, a lot of stuff going on in markets, guys. If you have questions or concerns, write them in the comments below. Really appreciate a thumbs up on our videos. Please like, share, or subscribe. As always, my question is for you guys. Do you think markets are going to end up higher or lower for this next week? We've had a couple low weeks now. Have to wait and see. Really looking forward to some of that stuff. Again, the Top Notch channel is outperforming all funds. Please tune in to us. We want to help you guys out. We want to teach you guys about markets and have you guys learn. But we're very excited for where we're sitting at so far for this year. Sitting at 17% gain for the year. That is an excellent return for the Top Notch channel. That's another Top Notch video, guys. We'll see you guys next time. So that'll lead us, guys, into our funds. Where is Top Notch allocated now that we are ahead of all market funds? Where we're ahead of the CSINF funds, above all these ETFs, about 2%. We're sitting at 17% for the year, ahead of all market funds, beating the market. We are currently allocated in the G fund 100%, with new allocations going to AGG or the F fund for TSP folks. That's where we're sitting for the year. Again, 17% sitting in the G fund. We're out of moves for this week or this month, so we'll have to wait and see for next week. But we'll be here in the G fund until September at least, and we'll have to see if markets move higher or lower. Like I said, we're at a very critical point for a lot of funds, but that's where we're allocated. Again, if you guys have questions, please write them in the comments below. Really appreciate your time. That's another Top Notch video. We'll see you guys next time.